It's time we look at the other side of the coin. The question is, which coin? The silver coin or the gold coin? Well, we'll find out what Goldman Sachs has just mentioned in a note about gold and silver as we explore. Why should we listen to some big bank? Well, I tell you, it is a lot because they have a lot of analysts there that are looking at the markets and looking at what's going on in the world of precious metals. And they have analysts who specifically look at these things, just as would anyone else in the alternative media or otherwise. In fact, I think we should be paying attention to all sources. And some of the reasoning may be logical in spite of some perceived agenda they may have. And I'm not discounting that either. Honestly, I don't discount anything except for some of the more crazy, wild conspiracy theories out there. But nonetheless, one thing is for sure, gold and silver are moving, and they have moved over the past 18 months in a northerly direction. Both metals have. But the problem is the ever-widening gold-to-silver ratio. And Goldman Sachs has made a very strong announcement with a new price prediction of about $3,700 for gold by the end of the year. We have seen some adjustments in the past, but nonetheless, this is one that obviously is looking like it's more bullish for the metal, but by the end of the year. Not so much for silver. Now, if that's the case, and that means that gold is a good deal right now to buy. But nonetheless, I think we should make our own decisions based off of our own understanding of the markets by looking at a variety of sources. Also, when you go to buy your precious metals, you should look at a variety of sources too. I'm saying that even though I'm sponsored by Summit Metals. Summit Metals, though, has proven themselves to be the low-cost leader for gold fractional eagles. Very consistently. Very rarely do they not have the lowest price, so check them out. They also have very good prices for these little 1-gram bars. I've got this nice little wallet, which is an invention of their own, that is available as well. And so check that out over at summitmetals.com. And I want to thank them for sponsoring this content. And so what is it about gold and silver that we have to look forward to? Well, I recently did a video about how silver could reach $40 an ounce by summer. And yes, I believe that is possible. I'm not saying it's going to happen, but I lay out the reasons why in that video. This analysis has the exact opposite effect. I disagree with it, but let's walk through it. And normally I would not disagree with what they're saying here because of my decision back in 2017 to focus more on gold than silver. Gold will continue to outperform silver, Goldman Sachs said Monday, citing strong central bank demand for bullion as a factor that has structurally elevated the gold to silver price ratio. That is the massive truth bomb that I've been talking about for quite some time on this channel. No denying that. It is the central bank holding of gold that continues to press on that has really propped it up and has really caused that ratio to widen further and further, and to the point now where, as of the recording of this video, it is now above 103. So Goldman Sachs does not expect silver to catch up with the ongoing gold rally. The gold to silver ratio, which measures the number of silver ounces needed to buy an ounce of gold, currently stands at about 103 versus about 84.7 a year ago. And by the way, a year ago, 84 was still very high. So this is something that we've been seeing since 2022. But there's other factors that have to come into play as well too. And I mentioned in a prior video about what could cause silver prices to go up. But here we have Chinese solar production is now slowing amid oversupply, high recession risk, and central bank gold buying remaining strong in 2025. We expect gold to continue out-glittering silver, according to the bank. So they're looking at the Chinese market. The Chinese market, folks, is extremely important when analyzing precious metals. They're the most densely populated and the most populous nation on Earth. There is a lot of production. It's a production nation, and it is a consuming nation as well. Even if a lot of people aren't taking advantage of that consumption in China. there is still consumption of the products, silver, other commodities, to produce these things. And solar panels, as I mentioned in a prior video some time ago, they're making so many solar panels are being used as fence rows. They're all over the place there. It's crazy. And Chinese and the solar production has replaced photography as the largest use of silver in materials. So that is quite astounding to think about, and it gives you a little bit of perspective as to how the silver market can move one way or the other. But if demand picks up in other areas, well, that could essentially render this analysis null and void. And I think that is quite possible, especially with the copper boom and what's going on with copper right now. Chinese solar production slowing down, and it is also that given the strong correlation of flows, renewed demand for gold in 2025 was likely to boost silver prices too. But obviously, it's still silver prices could go up, but it may not be enough to get to $40 an ounce by the summer. But a silver price could, though, still climb up. And if gold really takes off, especially if it gets to $3,600 an ounce by the summertime, that leaves a $100 spread, before the year's end. We could see still silver hit $40, but gold will outperform silver is what they're saying here. Spot gold has gained over 26% so far this year. It did hit near $3,500 an ounce last month, also aided by geopolitical uncertainty and increased flows into gold-backed exchange-traded funds. Silver prices are currently trading about $32.50 per ounce. In fact, right now, it's just over that. That's up 12% so far in 2025. So right now, at least in 2025, gold is outperforming silver. Goldman Sachs thinks that's going to continue to happen for the rest of the year. Goldman reiterated its structural bullish gold view with this base price of $3,700 an ounce by the end of the year, as I mentioned before. But they think that it could hit $4,000 by the middle of next year. Essentially, by the time of the 250th anniversary of this country, gold could be trading at $4,000 an ounce. Man, it's crazy to think about that. It added that in the event of a recession, the acceleration in ETF inflows could drive the gold price to $3,880 by the year's end. So they're thinking recessionary fears could drive the price up even higher than $3,700. Furthermore, it has said in extreme risk scenarios, such as heightened concerns over Federal Reserve independence or shifts in U.S. Reserve policy could plausibly reach $4,500 by the end of 2025. Now, it's a little bit crazy, and you think about it too. Even the most astute analyst out there, they are essentially caught in confirmation bias as well too. And whenever there is a massive move to the upside, everybody tends to be bullish on the commodities. I've taken an unpopular stance thinking that gold has reached near its all-time high and it's overvalued. I got a lot of flack for saying that about gold. I love gold, obviously. I've bought a lot of it over, especially since 2017. But nonetheless, it's not very often that you see an all-time high when adjusted for inflation take place. And that's where we're at with gold right now. Well, that's where we were at when it was near $3,500 an ounce. In fact, I think that inflation-adjusted price is not too far off from where it is right now. It is, in fact, it's about $70 to $80 away from that. Now, the focus is what's going to see what the Federal Reserve is going to do about interest rate paths during the press conference that Jerome Powell will be having. That's happening in the middle of the week. And despite some of the past tensions and suggestions that the possibility of removing Powell, Donald Trump said that he had no intention of firing the Fed chief, whose term ends in May of next year. So I think that they're going to write it out, and that has calmed some of the markets for sure. But nonetheless, gold is a metal that likely will do well, and I do think that there is a possibility that gold could continue to outperform silver. I take this analysis seriously. However, I think if we were to start to see people start to really move in and see an opportunity with silver, even though the gold to silver ratio should not be used to gauge buying or selling of silver at this point in time is becoming less and less relevant as long as these central banks continue to hold and buy gold. And notwithstanding, opportunity and the sentiment could lead towards silver. And we could see a lot of institutional buyers, and we could see hedge funds going hard in on silver. That could blow all of that out of the water, especially looking at other metrics such as copper and other things that leave a bargain there for silver. I don't rule that out, and I think that is in the cards. And this is somebody who is rather skeptical of being too bullish on silver. I'm taking that stance now. And of course, as is always the case, I could be wrong about that. I don't take my feelings as seriously as some people do, and you shouldn't either. Or you shouldn't take what I feel. That's just my opinion, and don't make any decisions based off of my opinion. I believe in both metals in the long term will preserve your wealth. So there you have it. So I hope you'll check out these couple of videos here at the end screen of this video. With that, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.